Apollo Tyres handed in their Q3 report card after market hours today, and it has been a stellar set of numbers on all counts. Profits came in at 444 crore rupees. You have EBITDA coming in at close to 990 crores. Margins saw a very massive expansion, almost 700 basis points is what I'm talking about, 19.2% versus 12.1%, and revenues were also quite strong at 5,154 crores versus 4,399 crores on a year-on-year basis. So like I said, on all counts, stellar set of numbers achieved by the company. In fact, the management commentary is also quite robust. They said that performance across geographies has been robust in the past quarter. They continue to be extremely positive on the demand environment, and given their planned investment in capacity, R&D, brand as well as distribution, along with their cost optimization programs, they continue to be confident of growth. They believe they're extremely well placed to leverage demand recovery across segments and across geographies. They also flagged off that the government turning to expansionary mode in FY22 budget with a clear focus on growth, and the announcement of a scrappage policy is going to be a big boost for the entire automotive space, especially players like Apollo Tyres. As far as the breakup is concerned in performance, for India performance, demand momentum across key segments and key channels remains strong on the back of increased preference for personal mobility, government spend on infra, import restrictions, recovery in sectors like mining. Q3 turnover was highest ever clocked by the company, driven by year-on-year growth both in replacement and OEM segment. They've recorded best ever volumes in passenger vehicle segment in December 2020. They've also increased prices by 2 to 3% in the replacement segment across product categories during the quarter gone by. There's been a sustained recovery in OEM, which has also started contributing to growth. Leading share of businesses with all key OEMs is something that Apollo Tyres also reported this time around. As far as Europe is concerned, they witnessed weaker market sentiment with growth in all-season tyres, partially offsetting the decline in winter tyres. Despite adverse market conditions, they said that they've expanded customer base. They've added about 300 plus customers actually. Market share gains in both PCR and TBR segment has taken place. For PCR, which is passenger car radials, 26 basis points was the expansion in the UHP segment. For truck and bus radials, the expansion has been to the tune of 75 basis points. In the last leg of plant specialization, which will lead to significant improvement in cost competitiveness. Another important thing flagged off by the management. As far as cash flows are concerned, they've generated free cash flow of about 1,200 crores during first 9 months, that's YTD FY21, primarily led by recovery in top line performance, control over costs, control over capex, and working capital optimization. They've raised about 10.8 billion from a top PE equity investor. They've raised debt in early part of Q1 of FY21 at competitive rates to adequately strengthen their liquidity position. They've realized significant interest cost saving on the back of reduction in debt as well as reduced interest rates. So those have also played a part in an enhanced financial performance for the company. So yeah, largely it seems like it's been a good set. They're betting big on the growth story, on the recovery that they've seen across segments and across geography. So that essentially is how the quarter played out for Apollo. Let's see how the market reacts tomorrow morning.